Geoff Dennis, independent advisor analyst, Emerging Markets, joins in. Geoff, good morning. Thanks for joining in. Geoff, and I want to start with exactly that. Some of those Asian currencies have hit a multi-decade low. Equity markets are extremely volatile. There's some fear around what Trump will do. How are you reading into this?
Well, I'm pretty cautious about 2025 for emerging markets because I think the background is not going to be that favorable. And you've hit on a couple of things there, which I think are very important. My view is that the biggest driver of the markets in emerging this year is going to be the US bond market, because as Trump comes in, you're going to get some combination of tariff increases, presumably, and tax cuts. The latter will push up the budget deficit. The former will push up inflation. And I think what that's going to do is it's going to give you a higher bond yield. And I think bond yields in the US are going to go to 5%, maybe 5% plus at some point over the next few months. And that's going to keep the dollar well bid. So the fact that you made the comment there straight away that currencies in Asia are weak, that is also the case in most parts of emerging markets, especially in Latin America. And I think it's not a good environment for emerging market equity investing.
Spin this around then. You've got weaker currencies across emerging markets. So for incremental capital that has to find its way into these markets, this may not be too bad a setup, I would imagine, because you come in at a lower currency and maybe you potentially exit a year or 2 year out with a gain on that currency and, of course, potential gain on equities. Wouldn't that sort of be attractive? I don't know. I'm trying to look at the glass as half full right now.
Yeah, I think, of course, as long as we can get the timing correct. I mean, it wouldn't have been very good last year trying to catch the bottom of the Brazilian real, for example, which fell very sharply. So you're absolutely right. Once these currencies turn, that's going to be very beneficial for emerging markets, whichever market we may be talking about. But I think, as I say, we've got to get through a further adjustment of US financial markets here, in particular the bond market, before we're going to see the dollar stabilize and possibly start to come down. I've changed my view on the dollar. I was cautious about the dollar last year, but I think with Trump getting elected and with bond yields likely to go higher, I also think it's debatable how much, if any, in the way of interest rate cuts we may get from the Fed. Now, my current call is 2 cuts. I think if that's wrong, it's going to be less than 2, not more than 2. And so I think we would have to time that point where currencies are somewhere near the bottom, because if you do that, of course, you're absolutely right. You'll make a lot of money out of it. But are we at the bottom yet of some of these currencies? I kind of doubt it. I have the dollar going through parity against the euro. I think that's probably going to happen over the next several months. So in other words, I don't think the dollar's rally is finished yet. And you have to wait for that before you start to put money back to work in emerging markets.
Hi, Tamanna here. Just trying to understand what the next 20 odd days are looking like in terms of the biggest factors and what the emerging market view then turns out to be. I'm wondering how big a factor is the Trump swearing in, and then of course we'll wait and see what happens there. And where does India sort of stand in the pecking order as far as foreign flows are concerned?
I tend to believe that in the early part of the year, that's when you're going to see the strength in the dollar. That's when you're going to see potentially a little bit of pressure on EM. I'm not saying there's going to be a big sell-off. I just think it's going to be hard to get people to come back into the market until you know when the dollar has peaked. And so quite what happens as soon as Trump gets inaugurated will be how quickly he comes up with policies, the actual policies on tariffs and of course on taxes. Now, with respect to India, obviously a lot of people are trying to catch the bottom in China. I think it's wrong. I think it's too early to do that. I think the economy is still very weak, and you haven't seen the fiscal action I think that you need in China, notwithstanding this nice bump in the services PMI today for December. I view India as a bit of a competition I think investors have between India and China in terms of EM. I still think India is a much better bet. Obviously, there are issues to do with valuations, but you've got the growth in India. I think you'll benefit as you go through the year potentially from slightly softer oil prices. And bear in mind, although the Indian currency has hit lows recently, it's not collapsing, it's just drifting lower. If you really want to see a currency collapsing, take a look at the Brazilian real. And so I don't think you should view the Indian currency as a major problem. It's really a dollar problem. And once the dollar starts to turn, the Indian currency will look better. But generally, until you get more action on the Chinese fiscal side to boost the economy, I think India still is going to be the more attractive market of the two. I think Taiwan does well again in 2025. And I think we have to wait to see what happens in the Korean political situation to see how well that market does. But these are not easy conditions in global markets, I think, for EM right now.
Jeff, just one quick last question. So for 2025, what's the trade? I'm presuming you'd go long India. What would you do on gold? What would you do on crude? And if you may, what would you do with Wall Street while we're at it?
I was asked this question the other day, actually. I would recommend going long gold. I would recommend going I don't like shorting things, don't like talking about shorting things, but I'd be negative about oil. I think DM equities will outperform EM equities again in 2025, at least in the early part of the year until we see how this whole Trump thing shakes out. And so the US equity market, which I don't think will do anything like as well as it did last year with a 23% gain in the S&P, I think the US does look somewhat better than emerging markets. And within the emerging markets, I think India is still a good place to be, along with Taiwan. And then you've got to wait for some of these other markets, as I say, like Brazil, which will be your classic rally story when the dollar suddenly stops going up. But it's a little bit early for that. So that's how I'd stack all those assets that you mention up.
All right, thank you so much for that, Geoff Dennis there, Independent Energy Emerging Markets Commentator.